I'll hide the video. I'll hide the video. Let's go for today's purchase from open market journal entries. Yes. Let's go. Purchase from open market. So here also, my dear friends, if it is redemption, if it is purchase from open market, so first whether it is for redemption or not, if it is for redemption, you have to ensure. So ensure that whether the compliance of DRR and DRI is made. So therefore, first thing what you're supposed to do with in a journal entry. So first entry, my dear friends. So first entry, journal entries, you're supposed to ensure journal entries. Yeah. So before we go for, suppose if it is a purchase from open market, so now I can't say directly whether it is a redemption or not. I am purchasing now. If you are ready cancelling immediately, then only it is redemption. Otherwise, it is a not a redemption. Therefore, I can't say here. So now, if you are purchased from open market, entry first entry for purchase of debentures from open market. Correct. Purchase for purchase of debentures from open market. Suppose here, if it is for going to redemption, if it is redemption, then only the investment and DRI that you're supposed to check out. Otherwise, it is normal. So it is as same as purchase from investment. It is like as same as investment as of now. Therefore, entry is, my difference. Entry is own debentures account or investment in own debentures. Investment in old debentures, sorry, investment in own debenture, OWN. Debentures account debit to bank account. Investment in own debentures account debit to bank account. So this is for purchase price. There is a cost of investment or purchase price. For purchase price. So you have taken. So but here, my dear friends, you have to pay at the time of paying. One important thing I have missed out. So here, investment in own debentures, this is cost. Next one is broken period interest. Therefore, interest account debit. So this is for interest account debit. This is for broken period interest to bank is for cum interest price. So cum interest price means it is X interest plus interest put together. Got it? So cum interest price. So here, if it is, that is here interest on own debentures. Suppose if I say cost of investment, or in a technically I can say this is X interest or X interest price. This is what purchase of investment. So now till it is, if you are holding, so then till you are holding, it's not a redemption. So therefore, no entry will flow. Just on the interest due dates, interest normally we have to calculate on the debentures outstanding. So on that, if it is only for outsiders, we are supposed to pay. For our interest on own debentures, we will credit to P&L as a, and treat it as a income. So that's how it will run. Now suppose if I go for on redemption. Yeah. So now let us go second options. So now let us go event number 2. Wait, instead of event number 2, so purchase of own debentures, or investment. Investment in own debentures, we have the two options. What I can do? Cancel either immediate or later. Later means end of the year. at the end of the year, whenever it might be, or reissue. Reissue. It is nothing but sale of investment. Sale of investment. Correct? Now, if it is sale of investment, so this for this alone, if it is a cancellation of debentures, so for this, see journal entries below. So this journal entries, let us do it for redemption. So this is what we call it as, this is actually cancellation is termed as redemption. Redemption. For that journal entries, let us pass. So if it is just a sale of investment, if it is reissue means, so it is as same as purchase of investment and sale of investment. So therefore it is like normal sale of investment. Therefore entry is bank account debit. Bank account price to investment, that is investment in own debenture account. This is what cost to profit and loss account, assuming profit. Assuming profit. If it is a loss means debit, that's all. If it is a loss means debit, that's all. So there is nothing additional entry here, just it is a purchase and a sale. So on account of sale only, the profit or loss you supposed to calculate. Profit of the profit or loss, if it is there on reissue, that alone you have to calculate. So that's all for issue of for resale of investment or debentures. There is no much confusion. Till it is holding in my hand, I will treat it as an investment in own debentures. It's nothing but asset. So out of debentures, whatever interest I declare, out of total interest I will declare, out of that, whatever interest relating to own debentures, that I will transfer to my P&L account, because it will be treated as income from investment. When I sell, it is as same as sale of investment. Therefore, normal entry, bank account debit for sale price, total price, to investment in own debentures to the extent of cost of investment. Profit or loss will be credited or debited accordingly to the P&L account. This is what normal entry. Now only for this, let us go for now entries, journal entries. Journal entries for redemption. Journal entries for redemption. Journal entries for redemption. Journal entries for redemption. So now look out, already now if you plan to redeem, if you plan to cancel, then only it is a redemption, my dear friends. Now already you have purchased and placing that investment in a own debentures. Correct? So therefore, to the extent of face value, whatever is there, if you cancel that, to the extent of face value, it will cancel. But before that, you should ensure, my dear friends, important note. So ensure DRR is created before redemption at 10% if covered. If covered, that means if it is covered with adequacy of debenture redemption reserve criteria, then they have to ensure. So this is first one. Second one, this is first case, and second case, it has to be ensured that there should be investment. So investment of DRR is made at 15% of face value of outstanding or maturing. So now this too supposed to be done with. If it is not, before go for redemption, first create this, then only you can go. Got it? So first, before redemption, you have to ensure that these two are complied, already created. If not, first without a reason, you have to create these two, then only you can go for next redemption entry. So now first redemption. So here redemption means here not payment is not there, because already I paid the money and I have purchased and I have parked that in a investment in own debentures. So that alone I supposed to cancel. Got it? So therefore entry. So here it is not a case. Entry on cancellation. On cancellation, entry is, my dear friends, it is a reversal. So like debentures So debentures account debit, it is always at face value. So premium on redemption account debit, if it is there, this is for premium to so investment in own debentures account, investment in own debentures account, which is cost of investment to profit and loss account, so which is profit on cancellation. Profit on cancellation. Suppose if it is you purchase, that's a face values. For example, if it is 5,000 is a face value of debentures, you could able to purchase for 4,850. Correct? Anyway, premium you paid, that premium, suppose if you have paid 300 rupees premium extra you paid, that premium will go to P&L separately. That don't mind it. Yeah. So now here just what yeah, so now whatever the things are there here, suppose if it is a premium on redemption to payable, if it is sorry, I'm sorry. So here premium will not come because it has to be cancelled only to the extent of face value, because here debenture holder anyone, no one will come into picture. So only debentures face value we supposed to cancel, because already we purchased and parked in my books, therefore no premium, nothing. Yeah, already whatever cost you purchased, whatever cost of investment is purchased, if you have purchased at face value, it is at cost. If it is less than that, it is a discount. If you already acquired this debentures at more than face value, then it is at premium already, that in the form of cost it is already there. So now debentures has to be cancelled only to the extent of book value. So premium and all this concept will not come, because shareholders and all might not come here. So therefore 500 you purchased for 450, that means balance 150 rupees is a profit. So that will be transferred to P&L. Yeah. So this is nothing but it is purchased at a discount. That's the meaning. So if there is a premium, if you have paid extra, there is a cost of investment is more than what your face value of debentures, then it will be treated as a loss. So that will be debited in a P&L account. So this is what on cancellation. Correct? So if it is cancelled, that is over. Now on account of this, there is no premium, that is nothing is there. Now what you supposed to do? So now look out my difference on cancellation. So here, so it is on cancellation, that is correct. So before that, if you go for cancellation, now one thing you supposed to ensure was number one. So that is before redemption, sale of investment of DRR. This you supposed to sell. Either it's a profit or loss, that normal entry will come, my dear friends. So this is on cancellation. So thereafter, entry number B is reversal of general reserve. Whatever the general reserve is there, that DRR, that we supposed to transfer. So this is writing off of DRR. Writing off of DRR account. Entry is DRR account debit to general reserve account. So to what extent the balance is available, completely we have to close it. So here only on cancellation, what you're supposed to do, to the extent of cost of investment, it has to be transferred to debentures account and check out. So what value of investment of face value you are going to cancel, that comparing to the face value of investment, so and cost, so you will get to know whether it's a profit or loss. So that we supposed to transfer to P&L. That's it. Yeah. So these are the entries in case of debentures, my dear friends, if you purchased out of open market. So first you have to purchase, thereafter cancellation. But here, so at the time of purchasing, it doesn't mean that it is a redemption. Therefore, there is no sale of DRI. There is an investment of sale of DRI. So this is all not there. So just you have to ensure that it is a redemption or not. If it is redemption, then first sell the investment out of investment of DRR. So then purchase that investment, then cancel immediately. That normally that will work. So if you plan that it is a cancellation, you have to ensure that already DRR, if it is covered with the criteria, DRR is already created and corresponding DRRI at 15% is created. If not, if any amount is shortfall, then that first create that to the mandatory compliance, then go for redemption. At the time of redemption, so since you already purchased from open market, it is just a close of investment, as well as that is one asset and one liability will be set off. On account of set off, that is a debenture will be cancelled to the extent of face value, and investment will be cancelled to the extent of corresponding cost for that investment. If any profit or loss on account of that, it will be transferred to P&L. So that's how it will run. And once it is cancelled, once it is redeemed completely, so automatically that whatever the DRR they have maintained, it is not required. Therefore, it has to be transferred to general reserve. So therefore, reversal entry will come. So that's all normal. That's all the entries. So now, if you would have understood, let's go to the problems, my dear friends. If it is resale, really it is just a one entry for sale of investment. That's it. So during the period, suppose if there is an investment, so then entry for debenture interest on what we call own debentures. So that entry already I have shown you in the notes. So that's all. So if you are ready, let's go to the problem. Yes. So complete debentures theory and journal entry is over, my dear friends. So just we have to solve the problems. Shall we move on? Yeah. So redemption of debentures. Come to question number 1. Sorry, question number 7. Question number 7. Now, to start with, on January 1st, Rama Limited is a listed company. Therefore, here if it is, since the moment it is a listed, you have to ensure that no DRR requirement. It is DRR is not required to create. So keep in mind. So therefore, Rama Limited, so here had 500 debentures of rupees 100 each. Therefore, 500 into 100, it's a 50,000 is a face value outstanding in its books carrying interest at 6% per annum. In accordance with the regulatory requirement, the directors of the company acquired debentures from open market. So for immediate cancellation, underline immediate cancellation. Yeah, so that means directly you can deduct from the investments. That is a debentures itself. Directly you can cancel as follows. On 1st March, so it is on January 1st March, 5,000, they have 5,000 face value, and it was purchased at 98 cum interest price. So therefore, cum interest price means you have to ensure when the debentures, that is the interest are declaring, etc. Based on that, first cum interest price is 98. Out of that interest component, we have to calculate interest. We have to separate. Balance only is the cost of investment. And on 1st August, face value 10,000, and it is purchased at 100.25. Again, it is a cum interest. Then December 15, 2,500 is the face value, purchased for 98.5 x interest price. Debenture interest is payable half yearly on 30th June and 31st December. Therefore, it's a calendar year, and it is a calendar year. Keep in mind. Show ledger accounts of debentures and debenture interest for the first year, ignoring income tax. Therefore, for 1 year they have asked. So in a 3 installment they have purchased. But here, the moment if you purchase from open market, immediately you will tear off the certificate and throw off. So therefore, it is immediate cancellation. The moment if you purchase, automatically it will be cancelled in a debenture also. It is immediate cancellation, correct? So therefore no need to create debentures in own investment in own debentures account and all. Directly you can cancel. Yeah, so that's all. Come to solution. Yeah, solution. So question number 1, so page number 67, solution. So in the books of Rama Limited, so which account is supposed to open? So they have asked 6%, that's a debentures account. So therefore 6% debentures account. This is for half a page. Debentures account, 6% debentures account is for half a page, and half a page means almost some 8 lines if it is there sufficient. So then second ledger account, what we required was second ledger account, what they have asked, debenture interest, debenture interest account. This is purchased from open market. So therefore keep in mind, first we have to pay and we have to purchase. The moment it is purchased, it is as same as cancelled. Debenture is purchased and cancelled in a face value. So for that, just we are supposed to calculate what is the purchase price, and if it is a broken period interest, that broken period interest calculation we have to do it separately. Broken period interest we are supposed to calculate separately. Yeah. Now to start with, so after these 2 ledger accounts, my dear friends, in one page open these 2 ledger accounts. Thereafter in next page it's a working notes. Yes. Now to start with debentures credit side. So therefore particulars amount fill out. So then to start with, so by balance brought down, this is on 1/1/2000, 1/1/0 1st January. That's all they have given. Year is not given, therefore 1/1. Opening balance, it is opening balance which is 50,000. Opening balance is 50,000. So debenture interest as of now opening balance will not be there. So now let us go. It has been purchased on 1st March. So just keep in mind, my dear friends, in your question, whenever we go for the question while reading, so here they have said interest due dates are 30th June and 31st December. So therefore here 30th June, here this indicates, I hope in investment accounts you would have got practiced. So this and this is interest due dates, correct? So that line indicates interest due dates. That day how much face value of debentures outstanding is there, on that we are supposed to calculate interest. That's how it will run. So come back now to start with, my dear friends. First let's go on 1st March 5,000 debentures are purchased for 98 come interest. Yeah, so therefore now let us calculate for the purchase of that as a working note number 1. Come to working note. So out of that 1, so what is cost of purchase of debentures on 1/3, that is a 1st March or 1st March. Therefore, so now it is 5,000 is a face value, my dear friend. 5,000 is a face value. In that there is no second thought. 5,000 anyway I am going to cancel into it is a 98 come interest, correct? So into 98%. Can you tell me what is that? 5,000 into 98%. 5,000 into 98%, which amounts to 4,900, correct? Out of that less broken period interest, which is nothing but broken period interest is 5,000 is the face value into 6% into it is purchased on 1st March. Therefore, January, February, 2 months. 2 by 12. Therefore, this amounts to 50. So, 50 is interest expense. Interest expense. Therefore, what is your cost of investment? Cost of purchase x interest, which is 4850. 4850. So, therefore, what is profit on cancellation? Profit on cancellation is equal to face value is 5,000. Face value of debentures cancelled is 5,000 and I could able to purchase at 4,850. 4,850. Therefore, 150 is the profit which supposed to transfer to P&L. Correct? Now look out. Suppose for entry purpose, suppose if you want, just I will show you directly this whatever this amount 4,850 is there. This is directly we can cancel. Correct? So therefore, since it is for immediate cancellation, immediately I can cancel the debenture. So therefore, so just if I am saying entry debentures account debit, look out 5,000, just not required, just I'm saying how the for the purpose of posting. So debentures account debit, face value 5,000 to invest to bank account, wait debentures, interest on debentures 50 to bank account 4,850 to P&L account, it is wait 4,850, no, it is not 4,850, it is 4,900 and P&L it is 150. So cost 4,850 plus 50 rupees interest, total 4,900 what I paid, come interest price. Yeah. Now posting, suppose if I do debentures completely 5,000 I supposed to cancel, but out of that purchase price is 4,850 and P&L account 150 and interest account 50 rupees. Therefore, look out here in a debenture interest account on 1/3 to bank 50 rupees is a broken period interest. Then in a debentures account on 1/3 to bank, this is cost of purchase 4,850 and to P&L it is profit on cancellation. Since it is immediate cancellation, I have cancelled directly 150. So total 5,000 worth of face value has been cancelled. So keep in mind, out of 50,000, so 5,000 was cancelled. Therefore, now it is what's the face value outstanding? 45,000. Suppose if I am going to declare a dividend, interest means I have to calculate on 45,000. Yeah. So now next transaction 4,900. Yeah, correct, Simran. You are correct. So now 1st August. So before 1st August, 30th June will come. So therefore interest. So this is on 30th June to bank. I assume everything is paid. So therefore face value outstanding is 45,000 into 6% into 6 by 12, which amounts to 1350. Correct? Next, same entries. So next is in 1st August we purchased again 10,000. So therefore come to working note number 2. So cost of investment, cost of debentures purchased on 1/8. Correct? So now what is the come interest price? First is face value is 10,000. So come interest price is equal to 10,000 into 100.25%, which amounts to 100.25%. 100.25%, which amounts to 10,250. 10,250. So less broken period interest broken period interest, this is expense what I'm paid now. So it is 10,000 into 6% into 6 by 12. Sorry, not 6 by 12. When it is interest declared June. So June means July, August. That's all. We have purchased on 1st August. Therefore, 1 by 12. 1 by 12. 1 by 12. So which amounts to again 50, I think. 50. So therefore, broken period interest, if you deduct, it is 10,000 purchased. 10,200. Is it 10,200, my dear friends? Yeah, 10,025. Okay. Wait. 10,025. 025 minus 50, which amounts to 9,975. This is cost. Correct? So therefore, profit on cancellation. Profit on cancellation is, so face value of debentures purchased is 10,000, but this is face value. But I purchased, cost of investment was 9,975. Therefore, 25 rupees is a profit. 25 rupees is a profit. So this is what I am going to do it in 1st August. So therefore, 1st August, look out, interest 18 to bank. Interest is just 50. Interest is 50. For this, if you want, refer working note number. So for this, working note number 2. For this, working note number 1. So for this, already calculation is given. So come to here. This is on 1/8. So to bank 9,975 to P&L. So profit on cancellation 25. Therefore, another 10,000 gone. Another 10,000 gone. So that means here another 10,000 gone. Another 10,000 gone. As of now, 35,000 is there. Correct? Now let's go. On 15th December. On 15th December, again we purchased 2,500 at 98x interest. Correct? So therefore, third. So computation of profit or loss on purchase of debentures on December 15th. Now let's go. So face value of debentures purchased, which is 2,500. So what is the purchase price? Purchase price which they have given is equal to 2,500 into 98.5%, which is X interest. Yeah. So therefore, 2,500 into 98%. 2,500 into 98%, which is 2,450. Sorry. 2,500 into 98.5%, which is 2462.50. 2462.50. So therefore, profit on cancellation, this is completely X interest, my dear friends. Therefore, directly I am going to cancellation is equal to 2,500 minus 2462.50, which amounts to 37.50. 37.50 is a profit. So now what is broken period interest? Broken period interest is equal to 2,500 into, look out, December 31st is the interest due date. I am purchasing on 15th December. That means it is a 5.5 month interest I supposed to get. 5.5 month interest I supposed to get. Correct? So therefore, interest is 6% into 5.5 divided by 12. So therefore, 2,500 into 6% into 5.5 divided by 12, which amounts to 68.75. This is interest component. So therefore, in interest component, which is on 15th December, so 15/12 to bank. So this is working note number 3. So amount is 68.75, and on debentures it is purchase. So this is on 15/12 to bank. It is a purchase of debentures is 2462.50 to P&L account, to P&L. So profit on cancellation, which is 37.50. Correct? Now here again 2500 is gone. This is on 15th. Therefore, what is the balance available? 32,500. This is what? Closing face value. Therefore, on this is what? 31st December, what I supposed to balance? 31st December to balance carried down, which is 32,500 is there. On that I supposed to pay interest. So therefore here interest is interest on 31st December to bank. So debenture interest, which is 32,500 into 6% into 6 by 12 into 6 by 12, which amounts to 975. Therefore, whatever amount is there completely transferred to P&L. So by P&L, this is at the end of 31st December. Always total interest is total 50, 100, 1350 total. So total is total interest to be transferred to P&L is total interest to be transferred to P&L. So which is 2493.75. Yeah. So this is here. Debenture holders will not come into picture because we purchased from open market and immediately cancelled. So this is the entry. So if you have missed out anything, so kindly let me know. I will make the screen visible. Otherwise, let us go to problem number 8. Shall we move on? Yeah. So question number. So here, my dear friends, here in this problem, they have asked just 2 accounts, and moreover, since it is a listed company, DRR is not required. And moreover, though in a previous problem, it is a normal listed company. So therefore, they have not said, since it is already purchased from open market. So DRI about that, this investment, these things they have not asked. Got it? So that's how it is run. Next, let's go to question number 8. The following balances appeared in the books of company. It is unlisted. The moment unlisted, other than AFI, that means so DRR at 10%. Ensure. We have to ensure that DRR before starting redemption. We have to ensure that DRR should be created with at least 10%. Then on December, the following balances appeared on 31st December 2001. So 6% mortgage, 10% debentures of 10 each, and DRR, debenture redemption, for redemption 50. Correct? So take your calculator and calculate. So 10,000 debentures into 100, which amounts to 10 lakh, into 10%. That means 1 lakh DRR supposed to be there. Correct? How much it should be there? 10 lakh face value into 10%. It should be 1 lakh. But they have maintained only 50,000. So therefore, there is a shortfall of plus 50,000. I supposed to create DRR before redemption. This is how problem will start. Yeah. So first that shortfall of 50,000 I supposed to create. Then investments in deposits with scheduled bank. So that means it is investment of DRR. So free from any charge is 1,50,000. Correct? So now 10 lakh into 15%, 1,50,000. So therefore it is correct. 10 lakh into 15%, 1.5 lakh they have created correctly. So therefore there is nothing additional to be created. It is already created. Only shortfall of DRR is there that I supposed to create. Next, at 4% interest per annum. So therefore interest 4%, that is interest income is there that I have to receive and credit to P&L, to be received on December every year. So bank balance with the company is 9 lakh already there, bank balance. The interest on debentures had been paid up to December 31st March 2001. So therefore we are in 2001. So therefore interest on debentures had been paid off. So therefore don't think of that debenture interest. It is already paid off. Now on February 28, 2002, that means after 2 months, next year, 28th February, the investments were realized at par. At par means cost. Par means cost or face value, that is 1,50,000. That is 1,50,000. That is a value. And the debentures were paid off at 101. 101. Therefore, it is a premium. So 10 lakh into 101, if you do it, 10 lakh into 101%, that 1% extra, what we call 10,000 is your premium. Correct? So together with accrued interest, that is 2-month interest. 2-month interest together with accrued interest has been paid. So write up the concerned ledger accounts excluding bank transaction. That is exclusively bank, whatever is there, excluding that. If it is affecting debentures, this and all, we have to prepare the ledger accounts. That's all. A small ledger accounts in order to start. So that's it. Imagine here 10 lakh is the face value outstanding on 31st December. Till that it's over. Till that the story is over. Now we have to start 1/1/2002. That is our financial year. Got it? So the financial year is 1102. That is what financial year. In that year, after 2 months, this is after 2 months, we started to redeem. So therefore, at the end of that is at beginning of the year, since I'm going to redeem 1st January itself, in the absence of information, I supposed to create the shortfall of DRR. I supposed to fill out. So therefore, that 50,000 first I will create. Thereafter, on 28th February, before I go for redemption, I will sell the investments first. So thereafter, I will go for redemption. So here it is redemption means here they have said this redemption is not from open market. This redemption is not from open market. Correct? So therefore, either debenture holders I can create account directly, account I can create, or without account I can make the payment to through bank or bank as debenture holders account, like that. So, and 2-month interest we supposed to pay. 2-month interest we supposed to pay. That is what the case, 2-month interest. That's all, my dear friends. Now let's go for solution. Small ledger accounts we supposed to open. So it is question number 8. So page number 67. Solution. Now this is in the books of whom? In the books of following balance appeared in the books of company. That's all. In the books of company. In the books of company. In the books of company. That's it. So now what are the ledger accounts we supposed to open? First is debenture account I required, my dear friends. So which is first account I required? Debenture account. So debentures, that is 6%, no? Oh yeah, 6% mortgage debentures account. 6% debentures account. 6% debentures account for some. Completely it is paid off within 2 months, my dear friends. Therefore it is a 4 line sufficient. See, small account. 6% debenture account. Correct? So next, so for debentures existing balance, whatever DRR account is there, that DRR account I supposed to create. So first is DRR, debenture redemption reserve account. So this I supposed to create. This is also for some 4 lines, debenture redemption reserve. Then investment on debenture or debenture redemption reserve investment. Debenture redemption reserve investment. Debenture redemption reserve investment account is for some 4 lines. Debenture redemption reserve investment. Got it? So debenture redemption reserve investment is a third account, second account, and first account. Correct? So next, when due entry, suppose if I pass, so debenture investment anyway it will be sold. Thereafter, when we go for redemption, I required premium on redemption, therefore 4. So premium on redemption of debentures, premium on redemption of debentures. This is also just for 4 lines. All are 4 lines. 4 lines. So then if you want number 5, open a bank account. So bank account is for some 5 lines. So thereafter, for control purpose, open 6th account is debenture holders account. So then, my dear friends, since along with interest I supposed to pay, 7th account for control purpose, you can open debenture interest account. All are just 4 lines, my dear friends. All are just 4 lines. So entries, since already we have discussed in a theory, so just using that transaction, just we have to go for. So first, let's go with opening balance updation. So debentures, come at first update, opening balance, this is on entry, this is always on 1102. It is by balance brought down, which is how much? 10,000 debentures into rupees 100. Therefore, this is 10 lakh. Correct? Now, debenture redemption reserve. So, therefore, by balance brought down, they have given 50,000. This is again 1102. Debenture redemption reserve investment, debit side 1102. To balance brought down, opening balance 1,50,000 is there. So, therefore, it is clear. Just you have to ensure amount is correct or not. So therefore, so that's all. So now other things we have to ensure, my dear friends. Now we have to go for bank balance. How much is there? It is to balance brought down 9 lakh is there. 9 lakh when it is given 31st December, the bank balance with the company is 9 lakh is there. I assume it is 9 lakh at the closing. Yeah. So, or if it is nothing is given, so take it as 1102, opening is 9 lakh is there. Yeah. Now, if you are ready, let's go for redemption. So now, before redemption, my dear friends, I have to ensure that DRR and DRI, that is a debenture redemption reserve and debenture redemption investment, has been as per requirement, whether they have maintained or not. Correct? Now here, look out, they have not maintained here. In what we call debenture redemption reserve, they have not maintained this what we call 1 lakh we supposed to maintain, but they have not maintained. So therefore, additional 50,000 I supposed to maintain. Got it? So therefore, here same day. So 1102. So by at least before redemption, I supposed to maintain this. Got it? So by P&L, which is nothing but 10 lakh face value into 10% is equal to 1 lakh minus 50,000 opening balance. So what I required was 50,000 I supposed to take from P&L. 50,000 I supposed to take from P&L. Correct. Now DRI is DRI, debenture redemption reserve, is exactly completely it is there. Completely it is there. So now next entry is for sale of debenture redemption reserve investment. First I have to sell, then only I have to go for redemption. So if I sell, entry is by bank, it is sold at par, therefore 1,50,000. 1,50,000. This account is closed. Correct. In a bank, command update, this is on 28/2/02 to bank. To bank, investment sold was 1,50,000, but there is a interest. So interest on DRRI 1,50,000 into 4% into 2/12. So therefore this amounts to 1,50,000 into 4% into 2/12, which is 1,000 rupees is a interest. Broken period interest I supposed to receive. Broken period interest I supposed to receive. Now investments are sold. Now I have to go for due entry for debenture redemption. Due entry for debenture redemption is, my dear friends, so debentures account. Sir, it is DRRI. Okay. Wait. Interest on DRRI. Which one? $1,50,000 in a bank I have debited, my dear friend. In a debenture redemption here, investment it has to be credited, no? To bank. Oh yeah. Got it. To debenture redemption reserve investment account. Got it. Thank you, Siddhant. Got it. Yeah. So now this is, now investments are sold. Now I have to go for debentures due entry. In case of debentures due entry, now look out. Debentures entry is debentures face value in one shot we have paid. Correct. So therefore debentures here entry is, my difference, it is paid at, so 10 lakh 101%. So therefore it is 10 lakh 10,000. 10 lakh 10,000. Out of the 10 lakh is face value. 10 lakh is face value. 10,000 is a premium, and 10 lakh 10,000 is a to the debenture holders. Therefore here 28/2/02 to debenture holders account, total 10 lakh, face value has to be cancelled. That's all over. This account is closed. Correct. Next, premium on redemption here 28/2/02 to debenture holders account 10,000. Got it? 10,000. So in a debenture holders account credit side, by 6% debentures account 10 lakh, by premium on redemption account 10,000. In total 10 lakh 10,000. Yeah. Next entry is a payment entry. So entry is debenture holders account debit to bank account. Therefore in debenture holders again it is a 28/2/02 to bank 10 lakh 10,000 to bank 10 lakh 10,000, and in a bank account credit side, by debenture holders, sorry, for debenture holders, my dear friends, additionally add broken period interest by interest is 10 lakh into 6% into 2/12. 10 lakh into 6% into 2/12. It is a 10,000. Another 10,000. Another 10,000. Got it? So in a debenture interest account debit side, 2 This is 28,202 to debenture holders account another 10,000. This is a broken period interest. So now here in a debenture holders account, write it as 10 lakh 20,000. Corresponding figure here, debenture holders account 10 lakh 20,000. 10 lakh 20,000. So debenture accounts are closed. Yeah. So that's it. So whatever debenture interest is there, it has to be transferred. So by P&L account 10,000, you have to transfer. 10,000 is supposed to transfer. Debenture holders are closed. Bank balance alone you have to balance. So by balance carried down. By balance carried down. Bank balance, I hope it is 31,000. 31,000. So balancing figure. Then premium on redemption, it has to be transferred to by P&L. This is 28,202 by P&L 10,000. It has been transferred. So debenture redemption reserve, whatever is there, this has to be transferred to 28,202 to general reserve. General reserve 1 lakh in total. It's supposed to transfer. It's supposed to transfer. It's supposed to transfer. It is using journal entry, direct ledger posting. Using journal entry, direct ledger posting. Yeah. Make the posting. So that's all the problem. So now debentures has become a very simple chapter when compared to the previous. That's it. Come to question number 9. Question number 9. So Cencom Limited, again it's a listed company, therefore no TRR. No DRR. No DRR. Issued 1,50,000 5% debentures on 30th September 2000. So that means the date is 30th September 2000, on which interest is payable half yearly on 31st March and 30th September. Therefore, it is a year is 1st October to 30th September. So therefore, every 6 months, that 6 months is nothing but March and September. March and September, keep in mind. The company has power to purchase debentures in the open market for cancellation thereof. The following purchases were made during the year ended 31st March 2002. That means we are in 2000. 2001 is over, and in the financial year 2000, financial year ended 2002, my dear friend. And the cancellation were made. And the cancellation were made on the same date. That means whenever it is purchased, it will be cancelled on the same day. When you purchase, same day it will be cancelled. Now, on 31st December 2000, investment made for the purpose of redemption were 22,500. Correct? So now, since it is a listed company, so listed company means it is not, they have not mentioned whether it is a NBFC or the other entity. So only for AIFI and banks, for that DRRI is not applicable. So for NBFC, whether and other entities, whether it's listed or unlisted, they have to comply 15%. So therefore here, so 1,50,000 is the face value. No, DRR is not applicable, but DRRI is applicable. Only DRR is not applicable. So 1,50,000 into 15%, which amounts to my dear friends 1,15,000. 1,50,000. 1,50,000 into 15%, 22,500. Yeah, 22,500. Therefore, they have already created sufficiently they have created. So no additional things supposed to create, and no DRR is required. Therefore, directly you can go for redemption. Now in the year 2002, my dear friend, imagine last due date of interest is 30th September. Wait. Whenever is the last interest dates? So due dates of interest was 31st March and 30th September. If you are in 31st, that's the 1st March. So next immediate interest due date was 31st March. Therefore, it's a 5 month is outstanding. That's a broken period interest. Now, 25,000 nominal value purchased for 24,725 x interest, excluding interest. But bank outflow is including interest. That interest component I have to purchase. But here itself directly I can say 25 minus 24,725. So what is 275 is there? That's completely profit. Next, on 1st September. So again here 30th September is the interest due date. But here 1st September we are purchasing. That means again it's a 5 month interest is a broken period. So 20,000 nominal value, purchased for 20,125 come interest. So therefore, we have to calculate what is the 5 month interest on 20,000. We have to eliminate out of this price, and you will get the amount. Now you are required to compute debentures account and own debentures investment account, ignore taxation. Yeah. So that's all they have asked, my dear friends. So just two transactions. Come to solution. Come to solution. Question number 9. So page number 67, solution. Yeah. So question number 9, page number 67, solution. So it is in the books of Cencom. Limited. So which are the ledger accounts they have asked? One is debentures account. So therefore, first ledger account is debentures account. Debentures account for some 8 lines. Debentures account for some 8 lines. Then second account, open it. Own investment in own debentures. Own debentures investment account. Own debentures investment account. Own debentures investment account. Yeah. So that's all. Just for some first account is some 8 lines. So this account is for some 6 lines. So but investment in own debentures account, I suppose to it is an investment account. Therefore, I required little bit computation, my dear friends. Little bit columns. That is nothing but date, particulars, and 3 columns as usual. What is face value, cost, if any, interest, broken period interest, suppose if you would have paid. Got it? Like that. This side also date, particulars, face value, cost, interest. Cost and interest. What is 20 to 500, Siddhant? Oh, that's okay. Yeah. So now in a debentures, so that's how it is runs, my dear friends. Now let us go for case. It is a particulars. particulars and inner column. So here also particulars and inner column. If you want date, you can open date column, nothing wrong. Now to start with, what is the opening balance of debentures are there? Let us start. So therefore, so it is a date is it is in the year, let us make it as a 2002. Therefore January 1st, which is year is 2002, in all the year January 1st, by balance dot 1 lakh. So here don't think of what we call a bank balance, etc., nothing is required, just two transaction, just we have to knock off. So that's it. So now my dear friends, here they have asked what? Debenture interest, this and all they have asked, no? They have asked what? Debentures account and own debentures account, that's all. So therefore here interest calculation, nothing is there, my dear friends. Interest calculations, this, that, nothing is there. Yeah, let's go. First transaction, my dear friends. So already debenture redemption investment is there. So therefore here I have not asked investment account, therefore I will ignore. So and moreover it is adequately created. So therefore that's over. Next, let's start. On whenever it is created, my dear friends, here even though it's immediate cancellation, so they have asked own debentures account. Therefore I will take to own debentures account and same date I will cancel. When I purchase, it is not debentures purchase. Instead that I will call it as a own debentures, but immediate same day I will cancel here. Yeah. So therefore come to own debentures. First entry is 1st March. So it's a purchase of investment as same. So therefore 1302 to bank. So face value what we purchased was 25,000. So cost is how much? They have given X interest price is 2475. Correct? But under this working, show it working notes. What they have asked was, what is the interest? So first is on purchase of first one, 25,000 into 5% interest into 5 by 12 month, which is 521. So therefore interest is 521 we paid. So it is 24,725. Got it? Now immediate same day, my dear friends, it has been cancelled. Therefore credit side immediate same day, transfer it. Same day it is 1302 by debentures account, face value 25,000 and cost column same amount 24,725. Interest will not be there, that we will transfer later. So now if it is transferred, it will come to debentures credit side here. So 1302 to own debentures account, to own debenture investment account 24,725. Correct? But how much is the debentures cancelled? 25,000. So therefore the difference 275 is to P&L account, to P&L. So profit on cancellation. Date is the same, 1302. This is how it will run. Next, we purchased on 1st September 2002, 20,000 nominal value. Again, it is 1st September 1902. Again, to bank, it is What is the price? Face value is 20,000, but for price we have to go for working note number 2. So calculation of cost of purchase and interest. So face value is equal to 20,000. So what is the purchase price? Value of purchase price is common interest 20,000. So therefore, common interest price 20,125. So therefore, what is interest? Interest is equal to, it is 20,000 is the face value into 5% into 5 by 12. Sir, how 5 by 12? Look out, next interest date is 30th September. But this investment are purchased in 1st September. Therefore, every 6 months is interest paid. Now, on the date of transaction, 2475, yeah? Yeah. Now, on the date of transaction, so it is 5 month. Therefore, interest amount is 417. If you deduct, what is your X interest price? X interest price is 19,708. 19,708. So therefore, comment update here. So cost is 19,708. This is 417. 417. So same day it has to be transferred to debentures for cancellation. Therefore 1902. So by debentures account, cost face value is 20,000 we supposed to cancel, and cost is 19,708. So therefore in a debentures account, so it is 1902 to own debenture investment account, which amounts to 19,708, and same 1902 to P&L. It is profit on cancellation, which is 417. That's it, my dear friends. Just 2 transactions. Now 31st December 2002. So here interest and all they have not asked. So therefore, to balance carried down. So here 20 plus 25. So if it is gone, so still 1,05,000 worth of face value of investments are outstanding. Oh, I'm sorry. Yeah, yes, profit is Siddhant, no, Harsh Kumar is saying it is 252, which is nothing but 20,000 minus 19,708 cost. Yeah, correct. You are correct, my dear friends. 292, na? Yeah, 92 is correct. 92, it is 708. So therefore it is 292. 292 is profit. So that's it. Now if you balance, my dear friends, your cost column, but your whatever interest is there at the year end 31st December 02 by P&L balancing figure. So total interest you're supposed to transfer 938. It's supposed to transfer to P&L. 938. It's supposed to transfer to P&L. It's supposed to transfer to P&L. Got it? So that's all. So these are the 3 problems. So now it is a 6:58, almost 7. So take a break of 15 minutes, assemble back. Let's go to problem number 10, 11 and 12 after the break. So assemble by 7:15. So let us knock off another 3 problems in next session.